All right. Hello, everybody, to Finance Junkies. Apparently, VITALY, since you're in this industry, you've got some news for us about the strike coming to an end. Any updates?
Well, I mean, I won't say.
You
no one
talked to the
called
strike
me up.
leader, the union leader. They're like, hey, buddy, we got to end this shit.
No one called me up, and we're not talking about the UAW. We're talking about the film, the actors and the writers. So there could be a deal on the table. We don't know yet, so we'll see what happens. And if it happens, it's actually good. It's we might have a positive 2024 as opposed to everything being like feels like dog shit. You know what I'm saying? Because all these negative things are happening, all these strikes. So if they settle out, we get good content. If the UAW settles out soon, I think they settled with Canada too, by the way. Did you hear that?
Yep.
So if that settles out, that's a positive that people can return to work and all that. And obviously the writers and the actors can return to work, which we all want them to, because I don't want to watch Suits that Netflix is pushing on us right now.
It's like the 5th most watched thing in America. It's crazy.
And that's like an old show. So they're pushing like old content because they're like, oh shit, we're running out of content. So what's up, man?
What's up?
And
Chris, you're zoomed in heavy, Chris.
I'll zoom out a little bit.
Just a little. There you go.
Yeah, what do you think? My camera world here? We're talking about the strike stuff. And also, I am on a new TV show. So I don't want to say which one yet, but that might affect the schedule going forward. But we'll work all that out,
Yeah, congrats. But how'd you, was this word of mouth? How you got this gig? Did you apply for it?
So I shot the last show called New York Homicide. And obviously there's producers and showrunners there. So they called me up for this show. And I thought there was going to be season 3 of New York Homicide, which might happen, but this is actually a different show, and it's all in the South.
Yeah. Okay.
So you're going to be down here in Atlanta.
Actually, we're going all over the South. That might happen. The schedule is kind of crazy right now, what they're telling me, but I don't have the official document. But it's insane.
Well, let me know. Let me know if you're down here. Atlanta has a lot of movie studios, like a lot of studios here. So
cool. I will.
Yeah.
All right. Before we get started on obviously the red day we had in the market, we got to cover something that I found out today. Apparently, if you click on this link called ENPHASEenergy.PalantirFoundry.com, it works. You get a real link. We've had people in the Palantir community dig through these companies with this .Palantir Foundry link, and all of them turn out to be clients, like every time. So it's very interesting.
How do they find that? That's an interesting, like, how do you discover that? Like, you just put any company .Palantir Tech or something, Palantir Foundry?
I don't know how this account found it at Palantir Updates, but he found it, and it's a real thing.
So so today the news is I've sold out of ENPHASE, and
and you bought Palantir.
And went full Palantir. I took the whole position.
Okay, so let's say ENPHASE is using Palantir. Would that make you more bullish on Palantir?
No. So I keep going back to the issue that I think with Palantir, and people don't agree with me, but I hope ENPHASE uses them. I have no problem with Palantir being successful, by the way. The problem I find is that they only have like 500 customers. That's the problem I find with it.
Less than 500.
So now it's less than 500. So now it's going to be 501.
Aggressive there, buddy.
So, yeah. So that's my problem. That I actually don't mind them using ENPHASE using Palantir. If that's the case, that's great. But
let's say Bob comes out and he's like, our entire business has been transformed because of Palantir's software. Let's say that, because ENPHASE is in a tough situation right now. Let's say,
once again, it's an issue of scale. Like lots of businesses are transformed by niche players in the market. Like they can give shout outs all day long, but it's not something I'm interested in. And I wouldn't be interested in ENPHASE, by the way, if they sold 500 inverters. Like that wouldn't be interesting to me. The fact that they're selling,
we might get that Q3.
But they're still selling 5 million, even on their bad case scenarios. They're still selling 5 million now, So
yeah,
that's why that's interesting.
Room
to grow. There you go, Turk. Look at the positive.
That was some fun news. Let's get to the stuff that actually happened in the market today.
Wait. So funny story. Apparently, Truist is also a Palantir Foundry customer.
Forgot to mention that
because they have a login as well. I was like, oh, someone commented that, and I was like, oh, let me look it up. So
I think this is an AI bot. You could put in any company .
I'm thinking that too, man. Maybe, or maybe they like.
No, but it's a real. I can go to my computer, type in Truist.Foundry. It works. Like I don't know.
Yeah.
It's legit, bro. These links we found forgot the name of the oil company in 2022 November, and a couple days ago Palantir put out a press release, and like Oh, it wasn't like oil. It was a Babcock. It was the defense company in the UK. So there's some truth to it. It might not turn into a real partnership because maybe they're just on a pilot, but we'll see if they're using them.
What's the name of that company again?
Babcock.
Okay.
UK defense company, $5 billion revenue company.
It's a
Babcock.
good company.
It's a phenomenal company. It's great. All right. Big news of the day. S&P 500 hits $430.89. Worst day since March of 2022, down $7, 1.65%, and then another 0.12% of the after hours. Year to date, we are now up 11% versus 16%. If we see 420 on the S&P, we will officially have had a 10% market correction. So let's start with you, Vitaly. Give me everything you're feeling today psychologically. How are you feeling about the markets? Your stock ENPHASE was green in a sea of red. Kind of give me everything you're feeling today. If you don't care about the red that happened today, let me know everything you're feeling.
Well, I do care about the red. It's that I'm not doing anything. I'm not like selling my portfolio off. But I think now people are possibly believing, that rates will be higher for longer. I think that's what's going on. And look, a pullback in the S&P. I keep saying it's just part of the game, right? Because it was up a lot in the first half of the year. If you look seasonally, even I looked at this that during this time, September, October, that seasonally the market is down for the S&P. So could it be just the fluctuations of the market? Absolutely. But I also think Powell is not helping the situation, and he keeps saying that he's going to keep raising rates. So that'll affect our companies. I think that's why things are getting hammered, and they'll continue to get hammered if he doesn't reverse course. So am I doing anything with the portfolio? No, I'm just looking what I can buy. And by the way, I bought some spreads on Google. That's what I did. That was yesterday, though, before the bigger crash. So there you go. But I do have those spreads on Google now.
The guy who submitted the PhD thesis in 1986 that confirmed the hypothesis that when the 2-year and 10-year invert, there was a recession. He was on CNBC today, and he was incredibly upset at the Fed because his analysis.
Show it. I just put it on.
You saw that clip? I think this is worth the whole 6 minutes. This is like a great clip.
Are we allowed to share these clips with?
Yeah. KRIS, we can't hear on.
Harvey. He is a professor.
You got to increase it. It's really low.
Okay, hold on one second.
If not, I'll do it on my end.
Yeah, go ahead. Do it on your. Well, actually, I got it. Well, yeah, do it on your end.
Okay, give me 1 sec.
And essentially, ENPHASE, by the way, I just want to point out. If you want to talk about this first, and then mention something about ENPHASE.
No, let's do ENPHASE for like 2 minutes, then we'll go to this.
Okay, so while you bring that up, if you look at the chart, I don't know, should I bring up the chart of ENPHASE?
Yeah, go ahead, bring it up.
It's nice to see it, I guess. So
there's definitely people curious why it's green today. And also, what are your thoughts on buybacks? You think the company was buying back today?
I don't know if today, but they are definitely buying back. There's no reason they would, because last time they bought was at 160, approximately 170, somewhere in that range. Hold on a sec. So why wouldn't they buy back when it's 120? Like I'm pretty sure when Q3 comes out, we're going to see some buybacks. Like it doesn't make sense. I don't know if they spent the full $1 billion because they have $1 billion in buybacks.
Yeah, I doubt they did that.
And the funny thing is, as the stock has been crashing, originally I calculated it was like 5% of the float they were buying back. Now it's like 6% of the float. So I don't know if they're spending all that money up front, or they're just gonna, over the year they're gonna spend it. But we'll see. If they think it's undervalued, just like TJ Rogers, who bought 32,000 shares or something like that. So I could see them buying a lot of shares right now. Let me just share this real quick.
While you're sharing, I'll do David's super chat. David, thank you again for the $28. Any thoughts on Datadog and GLBE? Also, would you walk 500 miles to see Proclaimers concert? I don't know who the Proclaimers are, bro.
So I can't really talk much about GLBE. I'm not sure who they are, but Datadog, it is kind of sad because Cisco just made an announcement that they were going to acquire Splunk. They could have taken out Datadog a long time ago at a much lower valuation, but hey, this is what happens. You live and you learn.
Wait, well, I do want to ask you that, but let me just share this real quick, and then we can move on. So this is the chart of ENPHASE. If you look at this purple line here, oops, I'm moving around. You see this thicker purple line right here? So we are hitting this 1 time, 2 times, now 3 times. So this is why we're experiencing a little bit of a bounce back. So I think, look, we don't know what's going to happen if the rates do continue going up. Then I don't know if we're going to stay, because at some point, by the way, in January, which is funny, January 2024, there's a decision moment, maybe a month earlier, of whether ENPHASE goes up or down. That's like the last decision moment.
What do you
So
mean
whether-
decision moment?
Well, here we're in a negative trend. This is a massive negative
okay.
trend. So are we going to break out? Or are we going to break down? So either way, it's going one way or another. ENPHASE is not a stock that sort of just hangs there. I don't know if it'll just hang at $120 forever. It's either breaking down because the rates are higher and they gave bad guidance. So this is an important moment where, you know, we'll see if we hold it. But so I want to say, what is the negative here? Well, what is the negative if we break through? So maybe the negative is $80. Okay. I want to point out the positive if eventually we get back into this range. You know, 2025, I still see we're in $200 to $300, maybe $400 if it overextends, but in that range. So I still see, no matter how we get to $80 in the interim or $100, whatever people are thinking, the next couple of years for ENPHASE are just nothing but growth. Okay. So as soon as the rates start coming down, this stock has, I think, limitless potential. That's in my opinion.
Okay. And then one more super chat by David. David, again, thank you for the money. Let's talk about ENPHASE, baby. Let's talk about ENPHASE and me. Let's talk about all the good things and all the bad things that ENPHASE may be. Am I too optimistic to assume ENPHASE will have accelerated revenue growth in the year? Well, VITALY basically answered that, right?
I think yes. I think
Yeah.
yes.
If interest rates come down, solar adoption should increase. Yeah.
Yeah. I don't know who, you know, I don't know who's arguing that solar adoption is fading away. If that's your bear case, then that's wrong. Your only bear case now should be the rates are too high. People don't want to spend the money, but all this demand is being piled up. And I think at some point when the floodgates are opened and the rates are lower, I think you're going to see massive growth for ENPHASE, like just massive, especially United States, by the way, because let me point out one other thing. The IRA, and this was somebody in our Discord who pointed this out. The IRA is paying higher for ENPHASE microinverters, for microinverter tech, than they are for optimizers. It's a 11.5 cents versus a 6.5 cents per kilowatt hour. I'm sorry, per watt. Let me correct that. Per watt. That means the government has picked the winner, and they've picked microinverters, which obviously ENPHASE is the leader in.
The other thing is also, you know, once we watch this clip, it'll make a little bit more sense. But I think right now the housing market is a bit frozen, so there's not a lot of activity in terms of buying and selling. But my guesstimate would be that when people start buying homes again, because, you know, whenever people buy homes, the sentiment is, I'm going to live here for 20 years. You know, it's never like, oh, I'm going to live here for a couple of years and then I'm going to sell out. Like, you know, the mentality is always, this is my forever home and I'm going to buy it. So investing is typically what people do. You know, you usually will redo the house a little bit here. You might get a solar panel system put on there, especially if you're like on the green energy binge. You may end up saying, well, I need to take advantage of, you know, like all the credits while they're available. So let me put solar up there. Let me get an EV. Like for me right now, I try to think of myself as a consumer, and me as a consumer, when I get a home, I live in Georgia. We have abundant sunlight and I plan on getting an electric car. So I'm like, yeah, I'm definitely going to get a solar roof. Like even right now, when it comes to purchasing a home, the decision ends up being, is it south facing to maximize my energy input? Because at a certain price, the cost of solar becomes way too cheap and you miss out on infinite gains from not going that route. So it's almost like, do I invest in the stock or do I invest in the solar system? And the solar system ends up really benefiting me significantly. So my whole thing right now is, I think when we start seeing people have the ability to buy homes again, you're going to see demand for solar pick up, because that means that more homes are being bought. When people buy a home, they usually do capital improvement projects that are throughout. And one of the improvements that they have is going to be around putting up what do you call it, solar roofs. Right now, there's probably a ton of sellers that are holding back inventory. And the last thing they're going to do is want to put a solar system on the roof and then try to, you know, like mitigate, like sell that up in the when they sell their home. So I think right now we're in a point where the reacceleration in the housing inventory side would be very helpful. So basically we need home prices to either stabilize or come down a little bit, with interest rates to come down as well, because that would really help out a lot. But I don't know, maybe the Fed is saving this as a trump card in case of a recession and saying, look, if we do get hit with a pocket of recession, we can start lowering rates, and we have that insurance as backup.
I think they're sort of waiting for that. You know, I think the Fed does wait for something to break. Like that is happening, because right now they're like, well, the economy is kind of strong. And I do want to share a clip. Can we go to this clip? Am I allowed to share Bloomberg, or is that not allowed on the stream.
No, you're allowed to do that. Oh, by the way, everybody, we didn't get demonetized yesterday. Somehow
Oh,
KRIS pulled
okay.
some magic and we didn't get demonetized.
So
which
the
is-
reason I want to, the one thing he doesn't say is that maybe he messed up. So this is kind of funny, but let's listen to this. All right.
I guess it's fair to say that the economy has been stronger than many expected, given what's been happening with interest rates. Why is that? Many candidate explanations. Possibly a number of them make sense. One is just that household balance sheets and business balance sheets have been stronger than we had understood, and so that's spending is held up and that kind of thing. We're not sure about that. The savings rate for consumers has come down a lot. The question is whether that's sustainable. That could just mean that the date of effect is later. It could also be that for other reasons, the neutral rate of interest is higher for various reasons. We don't know that. It could also just be that policy hasn't been restrictive enough for long enough. And there are many candidate explanations. We have to, in all this uncertainty, make policy. And I feel like what we have right now is what's still a very strong labor market, but that's coming back into balance. We're making progress on inflation. Growth is strong, but I think by many forecasts, many forecasts call for growth to moderate over the course of the next year. So that's where we are, and we have to deal with what comes.
So let me just stop sharing. It was funny because he didn't say, okay, we caused the problem with inflation. If you missed that. So, but he's saying now I'm just translating it into English. Now we're trying to crash everything. Okay. And we're doing our best. But these people have way too much money because we printed way too much money. So we got to keep the rates higher for, like, literally that's the translation of what he's saying. He's not actually giving fault for anything that he did. And he's saying, I need to sort of bring this all down a notch because otherwise inflation is still out of control. Right. That's what I took away from it.
No, that's fair.
I mean,
go ahead,
I think the inflation, believe it or not, wasn't even due to all the spending. I know that sounds crazy, but I think it was more supply chain issues. And the supply chain issues ended up being really bad to the point where inflation creeped up. And instead of just letting things materialize, which I think they were right in saying transitory, they ended up just making it worse by actually like raising rates to such. Not that they didn't need to raise the rates, because I completely agree that they needed to raise the rates, but that speed at which they raised the rates was kind of fast. And what that did is now you have, like I said, you have a frozen housing market. How are you going to correct for that? And right now, shelter being the largest component, keeping inflation above the 2% target that they have, that part needs to break. Now, it is technically breaking right now, because if you look at the variation between the price of rentals versus the actual price of the homes, rent prices are basically stabilized, and actually in some parts of the country, like I said, they're actually below year-over-year growth numbers. So I think we're headed towards disinflation, no matter how many times people think that inflation is not there. The part that really screwed us over the last 3 months, or at least in the last 90 days, is the price of goddamn oil. Like, that sticker shock is causing the reverberations around all the inflation talk right now. But I think that will even moderate as well. Like, once production starts to come back online, like, there's no way that we can sustain $95 oil for a prolonged period of time, because at this point now there is an EV adoption mechanism out there. So right now, if you keep oil elevated above $90 for a prolonged period of time, bro, you're going to see EV sales just skyrocket, because no one in their right minds is like, yeah, let me pay $500 a month in fucking fuel charges.
Yeah.
That ends up being like $600. Like, my wife right now, she spends close to, I mean, granted, we use premium, but she spends right now close to like $500 to $600 a month in just fucking fuel. So I'm like, bro, I could just get a fucking Tesla brand new, and that's my car payment. The fucking same amount that I'm putting in fuel is my car payment. So, you know what I'm saying? That they're just.
Did he just turn bullish right in the pod?
I'm not turning bullish on it, but I'm just saying that the sustainability of high oil prices is not as it's not as linear as it was back in the day. Like, back in the day, they raised the price of gas. You really didn't have a choice. Now,
That's right.
You're going to see a faster EV adoption curve happen if if oil stays above above
Well,
this amount.
let's also watch this clip as well, because you're saying oil will eventually come back to reality, and housing might also do that. This is the guy who made up the thesis around the inverted yield curve. He's obviously been correct about that for the past 40 years. And he has a message for the Fed. This is 6 minutes, and I think it's worth everybody to listen to the whole thing. This was a good one.
And the latest Fed decision is Campbell Harvey. He is a professor of finance at Duke University. He also coined the inverted yield curve indicator in a 1986 thesis. And Professor, thanks for being here today. Let's talk a little bit about the inverted yield curve, because it's gotten a lot of pressure from people saying, hey, it's wrong. It's been indicating recession for a long time. You think they're misreading that indicator. What's it telling you right now? What do you see?
So the indicator is 8 out of 8 in predicting recessions, and it doesn't have any false signals. So one thing is the lead time from the inversion to the beginning of a recession. And if we look at the last 4 recessions, the average lead time is 13 months. So it's way too early to say this is a false signal. Maybe it does turn out to be a false signal, but you can't say it's a false signal when you're not even at the average. So at the average, we would expect a downturn to start in December or January.
December of this year or January of next year?
Correct.
Because it takes 12 to 13 months before it's going to kick in anyway. And that's about
exactly.
where we're hitting.
And people also say, well, we've seen the yield curve inversion become less of an inversion. So kind of a re-steepening. Well, the last 4 recessions, that happened before the recession. So it doesn't mean that it's a false signal necessarily.
You think a recession is coming?
Yes. So I think that the Fed has made a major mistake. What they should have done yesterday is not just pause, but say, this is it. And indeed, it would have been ideal for them to say, well,
that's what the European Union did. They said, that's it.
To decrease the rates, not to increase the rates. And unfortunately, there's a false narrative going on by the Fed that inflation is well above its comfort level. And it doesn't make any sense to me. And let me tell you why. The most important component, the biggest share in terms of contributor to the CPI, which is running at 3.7%, is shelter. And shelter in the calculation is running at 7.3%. And that is far away from the sort of shelter inflation in the real world in real time, where housing prices are flat or negative. Rental costs, if you look at various surveys, those are flat or negative. So if you replace that 7.3% in the CPI with a more realistic number, like 1%, which is what we observed today, 0 or 1, then the inflation is not 3.7%, it is 1.5%. And if you believe shelter inflation may be a little higher, like 2%, then the inflation rate is not 3.7%, it's 1.8%. The point I'm making is this quote unquote long way to go that we hear from the chairman, that doesn't make any sense. And I'm not talking about a special inflation gauge where you trim certain things or you throw food and energy. I'm looking at the regular, the basic inflation calculation, but replacing one very stale component with real-time, realistic numbers, and we're below 2 right now.
So you think?
Thoughts on that?
Yeah, I agree. I think shelter is the only thing holding inflation up right now. Yeah, once shelter comes down,
right?
yeah,
Energy.
and energy temporarily, but energy doesn't really get counted in core, so they don't really take that into consideration. But it does have effects to everything else, right? Especially perception, like because people are going to see the price of gasoline and stuff, and that's going to be a triggering thing. If you were paying $1 less per gallon a year ago versus, I mean, not a year, like 6 months ago, and now all of a sudden you're paying $1 or $2 more per gallon, that's gonna impact you. But I think overall right now, shelter needs to be the thing that like brings us down. And I think it's going to happen naturally, because I was talking to my brother about this. The amount of multifamily construction, like apartments under construction and that are finally coming to market, is staggering. It's like so many are coming on. So will that mean that rents drop? Hopefully for some people. Yeah, I hope so, because rent prices, of course, for a lot of people are one of the things that really hurt them significantly. But I see more of a, depending on what region you're in, like flatlining of rents for a long time. And maybe that'll be the thing that like drives disinflation, right? Because remember, when it comes to inflation, it's always a year over year. So if your rent last year was 1,600 and this year it's 1,600, that's disinflationary, because that's technically inflation of 0%, so yeah.
I was going to bring up, I can't find it right now, but there was a chart that shows inflation in the 70s. Did you ever see that chart? That basically, I think what Powell is afraid of, and once again, I was born in the 70s, but I don't remember them. It was the late 70s. So inflation was going up. They raised rates, but then they stopped too early. And then inflation
Yes.
took off
Yes.
massively because they stopped actually raising too early. And then they had to go even heavier handed in the 80s. So I think that's what he's afraid of doing. And I actually can't fault him for that, because the mistake is worse in terms of if inflation goes crazy. We don't want to be a banana republic here too. We don't need our money to be completely devalued. So I could see why he wants to hold it off, or at least tell us he's holding it off for as long as possible, lowering rates.
That makes sense. The problem is what that guy says is the Fed is not looking at real data. And like, I think that's the difference here, right? Because if they're looking at real data.
Here's a question. Do you think they don't know that data?
That's a good question.
I think they know it. I think they talk their book, whatever they want to use. I think that's what happens. And as soon as they make up their mind that we're in the clear, he'll just reverse course. And we won't expect it. We won't know it. It's not going to be like, oh, we can plan for it 3 weeks from now. It's going to happen. So right. I think it's just going to happen. In fact, it might have already happened and we don't know. So the next meeting, they might say, hey, we're still paused.
Right. Let me ask you guys another question. The guy also said that by November, December, we'll have the 13 months on average that it takes to have a recession. How do you reconcile him saying inflation's dead? It's definitely below 2% if you look at real data, but also that a recession's coming. Do you think both can be true, or that the recession's not going to come, but inflation's going to be down? What do you think?
I think both can be true. It makes total sense. The only thing is, when it comes to recessions are usually very deflationary. Because what happens is during a recession, you have people kind of like cutting off a lot of business activity, right? That's what a recession is. You have like the slowdown in business activity to the point where it actually goes into the negative zone. So as an example is, the way that an economy typically works is, you ever heard of like the dollar? Like, okay, I'll demonstrate how the economy technically works. I have a dollar, Amit has a dollar, Vitaly has a dollar, right? Let's say I provide a good or a service that Amit buys from me. Amit buys a good service from Vitaly. Vitaly buys a goods and service from me. Each one of us uses $1, right? Let's say I say, you know what? I am not going to spend money this year. So I stop spending money with Amit. Now, Amit doesn't have that dollar to spend with Vitaly, and Vitaly now doesn't have that dollar to spend with me. So you see how now the business is completely gone. Our economy was worth $1 before, but because there's no more business happening, there's $0 in the economy. So now you're going to have a recession. That means that now I have to tighten my belt, right? On the other hand, if I want to solve that, what ends up happening is, let's say I borrow $1. So now I have my original dollar and I borrow $1. Now I can go to you and say, hey, Amit, give me $2 worth of whatever you're selling. You take that $2, you say to Vitaly, hey, give me $2 worth of what you're selling. And then Vitaly comes to me and says, hey, I'm going to buy $2 worth of stuff from you. So you see how that economy factor goes in. The more debt I take on, the more it keeps going in circles. So what happens now is that the debt is being pulled back. I'm not spending as much money. And if I'm not spending as much money, then Amit's not spending as much money and Vitaly's not spending as much money. And basically our economy is going to slow down that way.
But now here's my question. Don't stocks crash if that happens? Like if a recession
it depends. Happens. It depends on the sector. It depends on the sector and how they're impacted by it.
But a recession means things have to come down, like across the board.
Yeah. But but this is where you have to you have to take into consideration certain sectors. Certain sectors are going to be impacted by recessions way more than others. As an example, utilities are not usually affected by recessions. Why? Because no matter how much like slowdown there is, that people aren't going to say, well, I need to, use less electricity, so I'm not, I'm going to keep my lights off at home. Like, no, there's a basic minimum of things that people need to have. So those are usually assets that you want to hold during a recession. But things that like are exceptional goods, those things usually get hit. So it's like a luxury good. I wouldn't buy a luxury, like I'm not going to be buying an iPhone if there's a recession. I don't even know if I'm going to have a job. Why would I buy an iPhone? So usually when a recession hits, luxury goods and luxury goods and services are the first ones to take a hit. And then because they don't get as much customers, they end up cutting back on their own employees. And if they cut back on their employees now are not going to be buying goods and
So
services.
basically the stocks we like Apple, Google, ENPHASE, these stocks get destroyed if he's right.
No,
Well,
no.
It's consumer discretionary, first of all.
Yeah.
So solar is consumer discretionary, right? You don't need it, but groceries you do need, and you do need oil and you need energy. So those are different. That's why they sort of hang tight in a recession. And the other stuff that you're not going to spend on, it goes down. But once again, like I know we're talking about like this in the negative. I want to flip it around. Let's talk about the positive, that this is the time when you want to buy those companies too. I would say that when we come out of it, this is why I keep saying like everyone's so bearish on companies like Tesla and ENPHASE and they're all going to crash. Yeah, that might happen. But you're supposed to be understanding what's going on for the next decade, not just a year or two of rates. Rates will be coming down. Okay. Yeah. And I am no rate expert, but they will be coming down because the government can't afford its own debt without it coming down. So
but see, this is what I'm confused about. In 2022, we saw Meta go to 80. We saw Tesla go to 100. We saw the Google at 8. We saw the crashes. So do we think Google at 130 or Meta at 300 could go back to those levels when we have a recession if KRIS is right about consumer spending and all that stuff?
No.
But like, why? Why wouldn't that happen? Because people have less money to buy stuff. Advertisers spend less money, right? Why wouldn't that be the case?
Well, there's a couple of factors that I think have to be put in place. That was a point of a lot of fear. Usually the market, the stock price and Main Street are two different things. So a lot of times we want to try to equate both of them together, but it doesn't work out that way. When it came to like companies like Meta had a lot of stuff when it comes to like fears that TikTok was going to take over. Yes, was there going to be a slowdown? Yes, but social media wasn't going anywhere. The question was, hey, if we do have a recession, does that mean that there's going to be less ad spending on Meta's platforms? And is that ad spending going to result in decline in revenues for Meta? And that was the whole point that they had. So yes, Meta had some declines in revenues, but they also had a huge headcount that they trimmed away. And so a lot of companies are in the same position now that they weren't in a year and a half, 2 years ago. So right now, all these companies, they're prepared for a recession. They've cut out operating costs where they could already. So right now, even if their business is impacted, it's not going to impact their earnings nearly as badly as in the past. You look at Google right now, Google is making more money than ever before. But did you hear the other week, they cut their hiring division. They said, fuck this, we don't need it right now. So
really?
It just goes,
the whole division?
Like an entire hire, like it was a huge part of.
Wait, they didn't stop hiring. They're still always hiring.
Hold on, no. Let me just hold on 1 second. Let me show you guys.
But to Chris's point, while he finds that, is that those guys back last year prepared for the inevitable. Let's say the inevitable is some sort of a recession. So I think that could have been like great for their stocks to be hammered a year and a half ago because they all got their books in order. So I don't think they're going back to $85 if that's what you're thinking. Meta's not going to $85.
Yeah.
And in fact, I'd be surprised if we end the year with Meta not going above its all-time high from the previous all-time high. I think that's happening. So I think those companies are in a good position. But having said that, all our other companies, which are not as profitable or smaller, more specky, they are in serious trouble in a recession, I think.
Yeah, so take a look at this, Amit. So basically, Google is cutting about hundreds of jobs in their recruiting organization. Now, the reason why I think that's important is not because those 200 jobs are what's going to impact Google's bottom line. It probably won't even make a scratch. The point is they're forecasting not having that many new hires into the future. right? Because that's why they're laying off people. Like, why would you have a recruiting organization when you're not really doing that much additional headcount addition? That's the point that you're seeing right now. And then a lot of companies are doing that. Even my organization right now, like I was supposed to be scheduled for a training in Florida that I was supposed to go to in October. Budgets came down and they just said, you know what? No, we're not doing that. We'll just do a remote session. Now, what does that mean? That means that Delta didn't get money for my flight that I would have had to book. Hilton didn't get the dollars that they would have got for me, staying there. The local restaurants didn't get any money for me, like eating there. So this is how a slowdown in the economy works, where companies, when they scale back on spending, the next guy is the one that's impacted. Now, the next guy says, hey, listen, I don't have as many business travelers. So Delta says, wait, maybe I don't need as many flights. If they don't fly as many flights, they don't need as many, as many gate agents. If they don't need that many gate agents, not the gate agents. So you see how the economy, we're all tied in this together. So a lot of freezes and stuff are happening proactively, even without the Fed calling for a recession.
So are you saying we shouldn't be afraid of the word recession then?
No, not right now. This is like the most projected recession in all of history. Like literally everyone's been talking about this recession for the last 2 years. So every company
this is new to me, because when I think of recession and the way CNBC makes these recession clips, I think like market collapses, not 2008, but it's bad, right? Stocks fall down 40%. And I'm like, I just went through that in 2022. We just did that shit. So I'm confused why I should be down another 50% again, right?
That's the point, that it's not going to be another 50. That's what we're trying to tell you, that companies have done a lot of cost rationalization. So you're not going to see as big of a drawdown.
Correct.
Can we correct another 10, 20%? 20% would be the highest amount that I think we see another correction. But is it possible? Yeah, it can be. I think maybe another 5% correction, and then we have a Santa Claus rally once people wake up and just say, holy shit, maybe CPI isn't that bad after all. That's what I'm thinking. That's my projection right now. Because when you do the year over year comp for CPI, remember, what was the highest point of inflation last year? They were around this time, September, October, November, December. So imagine the year over year comparisons in terms of inflation with all this scaling back of staffing and scaling back of spending all these companies are doing. So like I said, from an earnings point of view, I don't think we have a problem. And I think that's going to show in the third and fourth quarter earnings for a lot of these companies, where people are going to wake up and say, wait a second, these companies are making money hand over fist. I need to buy these stocks while they're cheap. And there we go. Now we have another bull run going forward.
Right.
Well,
No,
I just want to give a caveat that if Powell does keep raising and we think, oh, there's one more raise, but it's not, and then he does it again, another quarter point. If he keeps doing that, I think we do turn around, and we might be testing those lows. Like, what would he have? 3,400 on the S&P. Yeah. So it's possible if he keeps going on his path, because if he thinks the world is in danger if we don't squash inflation completely. But I also don't think he's going to do that, because he just wants to delay the inevitable of lowering the rates. He wants to see something actually start to break. I think that's what's happening. So
yeah.
Okay, that's fair. Carlos, how are your thoughts on today, or did you not?
Good
care?
morning.
Were you sleeping?
Good morning.
I was
Slept while the world burned.
I was sleeping. I was getting a bunch of notifications. I was like, this can't be good news. So
why is my phone blowing up?
Let me down easy. Well, I have a lot of alerts. Actually, I'll talk to you after. I had some really fucking good news last night. So I was kind of dealing with some of that this morning, but it was good. So what was the bad news today? What did I miss?
Wait, hold on. Tommy Dimes thinks I haven't experienced the bear market. What am I? Am I 22?
Well, yesterday we did the age check. How old are you, Tommy? Before we even say anything, how old are you?
Yeah, that's a funny comment. I guess he thinks we're young. I guess that's good. I'd rather be thought
of.
Bro,
you haven't lived till you've lived through the fucking 08 recession, man. That time, bro, everything was falling apart. You had companies like Goldman Sachs, and they were trading like $20, 30% drop per day. All right.
All right, Tommy Dimes is 65.
He's talking about 1942 or something.
You know what my biggest concern was in 2008?
29.
I seen a video that the world was ending in 2012. And in
Right.
2008, I started going up to my, 2012, that whole apocalypse,
Oh my
Nostradamus,
god,
line
dude!
calendar.
I was in
I started
Times
going to my
Square.
mom, like really scared, and she had to calm me down. She's like, "The world's not." I was like, "But what if it does?" I was so scared in 2008.
Bro, that's nothing compared to the Y2K scare. Everyone thought every computer was going to shut down. because
Rugrats.
we didn't have the
That
capability.
theory is dumber than the Mayan calendar one, though. The Mayan calendar theory made more sense.
But this was a real thing, dude. And this is 1999. We didn't have like phones in our hand. You know what I mean? So people thought, oh my God, these computers are all going to crash it. In 2000, it's going to be over. And then guess what? It was like 3, 2, 1.
Everything was
Business
fine.
as usual. Everything
Y'all
was
remember
fucking fine.
Nostradamus has predicted
yeah,
like
Oh yeah,
the
that
world
was
would
big.
end
That
at
was a lot
this
of
end.
TV shows on Nostradamus. Yeah. That was,
Yo, there were so many
Nostradamus.
those history documentaries got me, bro. I was really scared for December 21st, 2012. Like, really
Yeah.
scared.
yeah.
And it was raining that day. It was
Well,
a thunderstorm. I was like, "Oh shit, it's
look,
happening. We're done."
Dude,
So look,
I still remember.
2008.
Look at
2008 was the real test of the system, in my opinion. Like, I wish I was paying more attention, like I am now, to everything, but that was a real test. And I can't believe the callousness I had in 2008 to continue buying real estate while the real estate market was completely collapsing
Should've been
because
buying
I didn't
stock.
understand all of it. I
Should've put all
totally
that money
didn't.
in
I was
stock.
like, okay, this is cheaper now. I must buy. I feel like we're in a similar moment where, in terms of like, we're not at all in 2008, but I mean, like, people are uncertain. But honestly, if you see something worth quality, you should just buy a little bit of the quality.
Yeah, I started investing in like 99, 2000. You know how that worked out, like a year or so.
Yeah, it crashed
later.
right away right after that.
Yeah, and then I felt like, oh man, I'm gonna have to stay away from this stuff. I was so worried. I was even telling my business partners at the time. I was like, look, I remember these conversations in our office before we went out of business. I was like, look how cheap American Airlines stock is. I remember saying that. Look how cheap it is. They're like, dude, do you think anyone's ever going to get on a plane? We ended up going that year to Amsterdam because back then it was like, oh, that was the place to go with a bunch of single dudes. It was like we went to Amsterdam. I think the tickets were $300 round trip during Christmas time. Like, well, that's when we went that year. And I never thought to myself, like, maybe we should be buying these airline stocks hand over fist, because they just tanked. They couldn't get people on planes. So yeah,
right.
we
And
went
it's like
through a
we're
couple
never
of
going to
bear
fly
markets.
again, right? So it's the same thing.
Yeah,
no one's ever going to buy houses. No one's ever going to fly.
It was, yeah, and we kind of had the same thing in 2020. It's like, who's ever going to get in an Uber again?
Right.
You can't,
Uber was $18 at one point, bro. Uber
We were
was
buying. Me
cheap.
and Carlos were talking about
Yeah.
it and actually picking up Uber shares.
that bought me a Bitcoin.
That
was
was we
buying
were on the
Uber and
pod.
Lyft. Look on the
That's when we
pod.
started.
Look on the pod. Yeah, we're like, what the hell? These things are so low. Uber, Lyft, $8, $15.
ENPHASE, FUV.
Yeah, yeah.
All right. I think let's end. Chris, go ahead.
No, I was going to say the best opportunities come during a bear market. Like if you guys realize fortunes are made during the bear markets, not the bull markets. The bull markets is when you're collecting the money. The bear market is when you're putting the money on the table. And like I said, right, the best thing that can happen is when great companies get sold off, because that means that now you have an opportunity to get in at a much better price. Now, that means that you look at all the fundamentals of the company. Is it performing? Is it something that's critical to existence? So this is where your inner Peter Lynch needs to be kicking in and saying, what are some of the things that people can't live without that are currently undervalued? And so that's when you start picking them up. As an example, Google. Look at every hedge fund manager and their exposure to Google right now. I guarantee you the next 13F that we're looking at, motherfuckers are going to be picking up Google right and left, and then it's going to be like, oh my God, bought 13 million shares of Google last quarter. I need to buy some more. And then it fucking just continues on and on,
Yeah, the best thing that can happen to Google right now, look, I bought those spreads, but I have a lot of shares. 2026. I'm not worried about what happens the next 3-4 months of Google. Like, it doesn't matter. In fact, it's better if it goes down, because then I could still continue to DCA into something that's really good. So
I'm dollar cost averaging my spreads. I'm cool with that.
Yeah, there is exactly. I'm doing the same thing. That there is no problem with these high quality companies tanking. I think if you're uncertain about your investment, if you pick the spec stock that you are not 100% behind, that's when you are fearful. That's when you want to run out the door.
I also participated in some of these Google spreads.
Nice.
So
yesterday or today?
What price did you get them?
You say that you say that like
you
say that like a recovering alcoholic being like, well, I only had one. I was out with the guys, we were celebrating. It's okay.
Dude, I was on the treadmill running before
buying
I was
spreads.
No, literally, bro. I was on the treadmill running. Chris texted me. He's like, dude, they're cheap right now. And I looked at it, I was like, fuck, he's right. And then I'm like, I had to stop running for a second to try to get the limit, and then they went through. So yeah, I think it makes a lot of Chris, a lot of people have been, so we got 20 minutes left of the pod. I mean, a lot of people have been asking me to do a Google episode. I don't think we have to do a whole episode. You want to just do the last 15 minutes on Google? You and Vitaly, obviously big shareholders. We can just end it off on that.
I'll give you a very, very simple
We're gonna convince you. Hold on, let me just convince you. There's a search engine called Google.com. Go check it out.
I thought ChatGPT was killing that.
All right, go, Chris. I was fucking around.
So easy enough to understand when it comes to Google and their projected earnings, right? Let me just pull that up real quick.
You know, the fact that this pod has to sell Google to people.
No, it's good. It's good. That's what you want.
Put the put the link in the chat.
So if you look at this right here, this is the projected earnings for Google. Okay, yearly, how much they're going to be able to generate. Let me scroll this in a little closer. So yearly earnings. So if you're looking at, let's say, December of 2025, which is right before January of 2026. You're looking at a high earnings estimate of about $8.94 per share and a low estimate of about 7.4. Okay. Google, let's just say, just for the sake of argument, it trades at $8 per share by 2025. I think I'm probably going to be leaning on the higher side of things. So that means that I think Google is probably going to be closer to about $8.25, $8.50. It could even exceed that based on the new revenue that's coming in from Google Cloud AI, which is just growing like gangbusters. But let's say, just for the sake of being conservative, let's say $8, right? Which is the consensus amount. Google typically trades at a PE, average PE, usually of around 28. So if you look at, let me just go to their macro trends right here. Not of the
I think
S&P.
it's currently at around a 20 right now, right?
That's forward. Right now it's 28. So right now, okay, let me go right here. So if you look here, on average, Google trades at about a PE of about a 28 over historical norms. So right here is where Google is trading at 28 right now, which is what it is today. So if you go back, you can see here primarily stays in the range between 25 and 30, right? 30 when it becomes exceptionally like bullish, and then 25 when things get bearish. And like the bearish of the bearish was last year in December, when it was like around 19, right? So usually you don't see it get much lower than that. So let's just estimate that that's going to be around the same amount. So if you multiply $8 of earnings times 28, what do you get for that? $8 times 28 is equal. Hold on, sorry. $8 times 28.
I'll let you do the math there.
Yeah. It's 200. It's $224 a share. Okay. So that's what you are looking at for 2028 earnings, right? That if things stay aligned, that it will be worth a minimum of 228. So that's where the spreads come in. And that's where, me and you, Amit, we spoke about. I sent you the data earlier today. So right now, let's say Google exceeds that and goes to like $9 of earnings per share, because it can happen. Mm-hmm. That means that now your margin of safety is even higher, because if it trades at the same PE level in 2026, Google will probably be worth closer to like 275. So we actually have some inbuilt margin of safety. Now, this all means that earnings per share for Google stays where they are and actually keep growing. I have no problem with that happening, because they're doing already $150 billion of share buybacks like over the next 2 years. And that's with share buybacks that they've already funded for now, and they've got $100 billion in cash. So Google's earning power is actually just growing higher and higher, which means that they're going to keep buying more shares. And so by the time we get to that amount, you're going to see that EPS number it's an easy target. It's nothing that's going to be hard. So I think an $8 EPS target is not hard for them to get to by 2026, in which case it'll be worth at least $224. So if you're thinking about it right now, Google is trading at $130 today, right? 130. So you're looking at, let's say that scenario happens, you're looking at an 80% return on just buying the stock in 2 years, which means per year it's a 40% return.
It's crazy.
And if you know how to do options, you do a fucking 5x.
Yeah, this was actually very valuable. So yeah, using the real data for Google's PE, I mean, taking a look at that it hovers around the 25, 28. That it's simple math here.
Yeah.
And you think
like
the
I said,
buyback, they're going to pull an Apple with these buybacks, essentially.
They're not pulling out. They are doing. Look at their
it's
share
like
count.
50 billion. What is the buyback amount? It's 50 billion.
They're
60
doing
billion?
70 billion
70
a
billion.
year.
Okay.
Yeah.
There was a great chart. I was actually looking for that. A great chart on the effect of consistent buybacks on stock returns, assuming all things stay the same, like assuming the stock price stays the same, right? Nothing changes. They continue to do buybacks. What the amplification of your returns is, it gets pretty sick after like 3 to 5 years. You start seeing 10x's pop up.
I do want to respond. Tommy Dime says, sounds easy. Buy Google. Right. So maybe he's being facetious. Look, the thing is, if Google does not hit $225 by December or January 2026, it doesn't mean it's not worth that. So you might have to wait longer, but that's why having shares, some real skin in the game as opposed to all spreads, by the way, is important to MIT. So I don't have all spreads. I do have mostly shares, and I'm going to keep it that way.
If you're smart, you put some of that in
before it gets there, and you can get a 3x, if not a 5x, if it still gets.
Well,
but you want to buy that stuff long term, and you put some in your IRAs. Put some in your IRA, and just forget about it. This goes back to. This actually reminds me of a point that I wanted to make when we were talking about the UAW, and we were saying.
Let Chris do this last point on Google, then we'll go to the UAW. Sure. Go ahead, Chris.
Yeah, this is right here. This is Google's outstanding shares, right? So if you look in 2018, when they started their program, it was about 15 billion. Now it's down to 13.64 billion. And this is with them accelerating their share buybacks now. Look at the amount of share buybacks that they have on a quarterly basis, dude. They're doing a crap ton of share buybacks.
It's a bank. It's like a bank. It's like a crypto, literally.
Yeah. And their EPS, by the way, was back in 2021. Okay, when we had the last run in December, their EPS was around 5.61. Their EPS took a hit going down primarily because they added a shit ton of headcount, which, by the way, they started reducing a lot over the last year. And if you look at Google's operating income, which is post those expenses, look at this financials. Their operating income. This is their operating income, which is re-accelerating. You see this small tick up, but that's because it's a TTM number. You go on a quarterly basis. Look at this.
Wow.
Look at this rise. 17 billion in operating income in September to now 2020, almost $22 billion. If you look at this on a forward basis, this ends up being around $88 billion of operating income per year. And Google is way more linear of a business. So it's not like Apple a little bit where you have like December being a really strong month and then things slowing down. This is what you're likely to see going
People are
forward
searching all the time.
Yeah. So I think the growth is going to be good. If you look at, like I said, if you look at on a TTM basis, you can definitely see that their operating income took a hit primarily because of all the hiring that they did. But thanks to cloud AI now, which is a profitable division for them, which over here was a money losing organization for them because they really started accelerating their cloud like around 2020 actually. So now you're going to see all that revenue get filtered in. I think they're going to do about 8 to 9, like based on the operating margins that AWS enjoys, about 30% operating margins on their cloud division. Google can get to about half of that within the next 2 years, which means right now they're running at $30 billion a year in run rate with a 28% growth. So you're looking at maybe 50 billion in revenue just from cloud services, or even 60 billion in cloud services by 2026. In which case, if they have a 30, like let's say, fuck it, they don't have a 30% margin because AWS is so much better. Let's say they have a 20% margin. What's 20% margin on 60 billion, right? It's a lot. It ends up being what?
12 billion.
12. That's an additional $12 billion in operating income that'll go to Google's bottom line in 2 years. That's not even considering all the growth that they have with just their generic search stuff and with Google TV and Google Premium, all the other stuff that keeps getting added in. I don't know if you guys saw Google added another $1 to Google Premium.
Yeah.
Did you see that?
I saw that
and think about how many people are on Google Premium now. It's crazy. And on top of that, there's a shit ton of people cutting their cords because everyone is raising prices on the streaming services. So people are just saying, fuck it, I'll just watch more YouTube. So even YouTube subscriber growth numbers are probably going to accelerate. And you think about Google is in every fucking home on the planet, whether you want it or not, whether it's through a service directly tied to Google or indirectly tied to Google. You're looking at the most valuable company on the planet that's trading at right now 1.69 trillion, when this should actually be close to 3 trillion right now, based on its potential for reach. And one last bull case for Google: next year is a fucking election year. Do you know how much money is going to be coming in through ad revenue from election year? It's
And
gonna
for
be
Meta.
crazy. And for Meta too.
All those,
Targeted
yeah.
advertising.
Yeah.
Targeted advertising, bro. They're gonna make
They're like
bank.
those elections are like having events in crypto. It's just guaranteed increase in revenue spending. In
50 to 100 billion dollars of ad spend on political ads, probably. You know.
I will say one thing. I wish Google did have a Carl Icahn sort of investor who made Apple. You know, he made Apple start their divvy basically by pushing them to start the dividend payments, and that actually increased Apple's share participation and all of this wealth that came from it. I think if Google did something similar, or had a
I'd
similar
rather them
investor,
just keep buying back shares, man. I'm all about that share buybacks.
I think it could be both, by the way, because
yeah,
Apple doesn't
yeah.
pay a massive dividend. I think it could be both. And I think a lot of people who are still on the sidelines for some reason on Google will definitely get off the sidelines when that happens.
I think the reason why is because a lot of people thought that ChatGPT would end up bankrupting Google, and they were saying that, oh, search volume would go down like precipitously, and that's their major business. And the exact opposite is happening, where now people are like, oh shit, these LLMs are untrustable because of all the hallucinations. So people are like searching more. So right now what's happening is people are asking it and then be like, man, I'm not sure about this.
You're
I better
double
Google it,
checking
double
it
check.
with
You
a
know, so
search.
it's growing Google's search business. And Google now, before 3 years ago, was afraid to unleash AI into the market because Microsoft came up and just basically was a dark horse for Google. Dude, Google right now is like just fired up. Their entire organization is fired up on beating back Microsoft. So, you know, they needed an enemy, like, so, and Microsoft gave them an enemy. So there you go. You don't want to fuck around with a
well, this is why competition is
motivated
also
Google.
good. I'm glad Microsoft did what they had to do. And also it gave us an opportunity to buy Google at 85 bucks, which wouldn't have happened. So all of these things play into how the stock market works. People should pay attention to that. When quality goes down, stop thinking that it's shit.
So real quick, at 4:55, Johnny Mac, I do have to say I called it. I called the Bitcoin drop today. We've seen our second day of red candles, and I believe.
Hold on, Carlos. I'm not going to give you credit for that.
Yeah,
the whole
I'm not
market
sure.
collapsed.
No,
The
no,
whole
no, no,
market
no.
collapsed. What do you mean? Everything
Look how-
collapsed.
Look how far
You
back.
can't take
I
credit
called.
for that one.
Hold on. I can absolutely take credit for it because I said on September 21st, we're going to see a red candle. And not only are we going to see a red candle, we're seeing a pretty
Nostradamus
Did
right
you,
here, baby.
did you know
Carlos
J-Pow was talking on the 20th?
Carlos Stradamus strikes
Carlos
again.
Stradamus.
No, this is planned. I mean, and I showed you the charts yesterday why this happens every year at and around this day. Obviously, the Fed saying what they said helped. But if you look, since we have come down off of our local highs the last 6 months, we've never seen any red candles are usually coming in 3s or 4s or 5s. So I still think we're going to continue to drop. That wasn't even what I was going to say, but yeah, that's right. I'm looking at it, and I actually am still not buying. I'm going to probably.
Well, I still think we're going to under $20,000. I still think that's happening.
Listen. I hope so, but I don't know. We are much higher than we should be right now. I'm saying by looking at the Bitcoin chart, we should be at 24 today this morning, and we should be on our way down to 20 right now. So
I know, but all it takes is Powell, even just one more, like just quarter, whatever, last one even. I think Bitcoin goes under 20.
Yeah. But I'm saying this is when it usually happens at and around this time, because I do believe that we are poised. We're getting spring loaded. Like the market feels very spring loaded. And even
when is the halving happening? Again.
That'll happen in May or something. There's if you just bring up the there's
so someone can check in the chat, but it's either April or May.
There's that halving countdown Bitcoin.
That is usually not the time when, by the way, so Bitcoin can be, I think it's still
226 days
down into the halving, but after that is when it usually starts to take off.
The typical cycle peak happens 100 and something days after the halving. So you figure anywhere from 6 months to even a year. It's actually been like almost a year later. It all has to do with miners. If miners aren't selling, then there's really no massive sell pressure. And you have to also realize that less Bitcoins are coming into the market, which is diluting the existing count less. So now we're only going to get, what is it, like 1.5 Bitcoin every 10 minutes, and we've been getting 3. So no matter what, even if no one bought or sold crypto or Bitcoin, every 10 minutes, 3 Bitcoins are coming in and diluting the existing supply. But
so this is exciting. So Carlos, I don't know if you remember, but after 2021 or whatever we were talking about on the podcast, 2022, we were saying, okay, everybody calm down. We got to wait now 4 years. Everybody, and we're coming up on that cycle where we're actually getting really close. And we've been talking about this for years on our channel that we just said, calm down. We got to wait. And now it's a waiting game. And now it's next year. So the waiting game is coming up. We're going to see what happens.
It happened a lot quick. It just took a lot longer. It feels on some level, but it also came up pretty quick. But to Kris and to Chris's point about the share buybacks, part of the reason why I'm particularly bullish or a massive bull case for something like crypto or Bitcoin in particular is the limited supply. And as these companies buy back their shares, they're limiting the circulating supply. Like assuming Google or Apple does not issue any new shares, which I don't think they're going to need to, because they just don't need to raise that capital. They don't need to dilute us. As they buy back the shares, it's the same thing that happens in cryptocurrency when the coins get burnt. So when they get burned, it means like there's no access to them anymore. You burn the keys to the wallet. You physically can't sell those coins anymore. And there's, say, I don't know, what is it, 4 million Bitcoin that people who bought early on lost the keys, don't have the passwords. Those coins can never be sold because there's no way to access them, which means that out of the 21 million, now you have 19 million or 18 million circulating supply. This is the same effect that happens when you have these buybacks. And if they are telling you we're going to buy back X number of dollars per year or X number of billions per year or X number of billions per quarter, they are telling you that they are essentially burning shares that will not ever be sold. And so if they do nothing and just continue to buy back these shares, forget about their growth, forget about the multiples that Wall Street gives them. The stock price has to go up. So when we were talking the other day, and AMIT, you were like, well, why would anyone want to options? Why would anyone want to start working at Tesla right now and get options as part of their payment because the stock's already at $250? Well, if Tesla continues to buy back shares, even
they're not buying any yet.
Not yet, but they've approved it. They just haven't released the funds yet. But you'd imagine as they move up these S curves and start printing more money from the software side, which has massive margins, they're already spending everything that they want to spend on ramping up factories. They're already spending everything they want to spend on their R&D. Eventually, they also want to get a return on that money as well. And it makes a lot of sense to buy back their own shares. This is ENPHASE is doing the same thing. This is good for us, and this has the same effect as burning coins when you're invested in crypto. It's all good for us, and that was a point or a counterpoint that I forgot to make the other day.
No, it's fair. It's a fair point. Let me give you 2 pieces of breaking news, and then we'll end off the show. So I just got the ARK Invest report. Kathy Wood has bought 744,000 shares of Palantir in the RK fund, another million of Ginkgo. She bought 2 million yesterday. In the RQ fund, she bought 46,000 of Rocket Lab. I think this might be a new position. I might be wrong, but there haven't been big buys of Rocket Lab. She bought another 140,000 of Palantir and RKW. She bought another 288,000 of Ginkgo and ARKG. And she bought another 150,000 of Palantir and ARKF. And she bought another 14,000 of Rocket Labs in ARKKX.
I think you have a battered wife syndrome relationship with Kathy.
I'm just giving the news.
You keep saying, like, but you know, she's changed. Like, she's never gonna. She told me she's not gonna do it again. She's back in the Palantir.
Okay, the second piece of news that's more exciting. Jeremy just signed a contract with Twitch to live stream 20 hours for the next 3 months to do a market close type of show from Monday to Thursday. This is a cool thing to see, especially for us that are trying to, find a bag one day on this podcast. Twitch is going to give him money to stream for 20 hours. That's it for 3 months. And he's doing a market close show.
That's pretty cool.
It's the first time I've seen a finance YouTuber to get a deal like this. That's interesting.
No one's going to watch that.
It's funny cool. Because
people will watch it. He has a big audience.
On Twitch?
Twitch?
He'll just bring.
He might not have, but the Twitch itself.
I think Twitch is for gamers mostly.
It is, but more and more they're using it. Dude, there's a guy on Twitch, one of the most successful Twitchers. Is that what they're called? Twitchers? Okay. One of the most successful Twitchers. He had 70,000. He had 70,000 people watching him sleep. He's getting super chats while he's sleeping. Had 70,000.
Shit. Okay, I got to do that. I got to try that.
It is funny because sometimes, depending on the day of the week, when I'm there particularly late, I actually catch the morning live stream that you're there when you're talking your nonsense in the morning, Amit. I'm like, we should join you one day. We should just hop on and join you one day for the morning.
Ahmed giving his analysis of why a stock is up pre-market. I love it.
Hey man, we had 600 people join, so
no, that's good. You do some
good
numbers. You do some good numbers, and it's more like a morning coffee. It's like, even if you don't want it, you gotta have it. You gotta have morning coffee.
Because first of all, I'm also
tie.
no, the big thing I've tried to do, I'm not giving that much opinionated analysis. I'm trying to present the news, because now I'm starting at 8:45. For those that don't know, I got inspired because I got YouTube TV. I started watching CNBC in the morning. I'm like, fuck it, I could go for 75 minutes if these guys go for 3 hours. And so I'm trying to present versus give my opinion. Go ahead, Chris.
Yeah, just I found the chart that I was really just showing. I wanted to show you guys. This is Google's revenue in its cloud. Okay, their cloud is the youngest cloud among the big guys right now. They were burning, if you see right here, in 2020, all throughout 2022, half a million. So if you add this all up, they were burning about $3 to $4 billion per year in operating income. Okay, so this is money that's burned. This is the revenue that was generated, but this is the money that gets burned by that. Look at the amount of growth that they have in profitability. This is the thing to be bullish about. 0.2, 0.4, 0.6, 0.8, and then you're going to see that compound on itself going forward. So as the operating margins start to improve, no longer will the cloud business be a drag on Google's earnings. It's going to be not a headwind. It's going to be a tailwind now. So just letting you all know, and especially with cloud AI going where it is, dude, Google is such a fucking obvious play at this point, but whatever.
It was obvious at 85 though, so I don't know why we're talking so heavy.
It's even more,
but
no. But see, the thing with Google, even at 85, is that there was some risk associated with possibly their search business getting disrupted. Like I fell into
that would
that
take
trap for
5 years plus.
Oh yeah, but the thing is, remember, everything is about the future, right? The point is,
all of us felt a little scared when ChatGPT came out. Like all of us a little bit, right?
The point is that whole thesis is dead.
You felt scared.
That thesis is dead. Like they're completely dead. I think right now, and not to mention, not only is it dead, but very similar to how we thought, oh, TikTok is here. That means that Meta and Instagram is going to be dead too, because social media. And then guess what fucking Meta did? Meta embraced that shit, put it on their own platform, monetize the shit out of it, and now is making more money than before. So Google is the same thing, where it's like, oh, AI is going to disrupt Google. We invented this bitch. They're monetizing the shit out of AI right now, and they're going to be ultimately the winners. We
need that on a shirt. We invented this bitch.
Also, by the way, so this is the problem when Chrome, like Apple has hardware that's super expensive, and Chromebooks are super cheap. Like my kids, they gave them all Chromebooks this year. As they get older, they're getting all Chromebooks, and that's how they log in and do their work and their homework and bring it to class. So Google has really sunk their teeth into the educational system and making sure everybody is raised on Google.
Not only that, but a lot of applications right now are becoming cloud native applications, which means you don't need like a high fancy computer anymore. You could run an entire suite of applications using a Chromebook, because all you're really doing is logging into a web browser that's going to be taking you to the cloud, and that's it. So there's really not a lot of internal resources that you need to be running on the computer itself, unless you work in some super high field. Like I think right now we are only at the beginning of cloud adoption. Like 90% of all compute right now is still on-prem. So the runway for cloud is still there. Google is one of the players in the cloud. And then at the same time, as the pie is getting bigger, these guys are gaining some market share in that pie. So that's the one you want to go with. I think right now, Amazon AWS is another really good one. So if I was to say there's two companies that are like surefire winners for the next 5 to 10 years, one of them is Google, and the second one, of course, is Amazon with AWS. Don't think Amazon is out of the picture by any means, man.
Oh no, definitely not. Is the strike over?
I'm looking it up now. Hollywood Studios writers near
chat. Mr. Seymour Duck, thank you.
Here, check this out. Check out this link.
They said Thursday night.
Let's go Disney, bitches. Disney.
Hollywood studios writers strike.
Amazon
near
Prime.
agreement.
Guy says he doesn't want to curse anymore, and then this is what happens.
Hollywood studios writers near agreement to end the strike. Hope to finalize a deal Thursday. Sources
That was
say
in the
writers
morning
and
they put this article
producers,
out. This is an old article.
Blah blah blah. Not 9:56 p.m.
Oh, it's update. Okay, so go to the
Yeah.
end. Go to the bottom.
Key points. Let's see what we got. This appears to be WGA members have been on strike for more than 100 days, with actors joining the picket lines in July, leaving.
No, Carlos, go to the top. Go to the third bullet point at the very top. I think they put it right there.
Saying on Wednesday evening, the
evening.
WGA and Alliance of Motion Picture and Television Producers released a joint statement that the two groups met for bargaining and would meet again Thursday.
Okay, so most likely this is happening.
That would actually be really good, and it would be really good actually.
Yeah, that's good news for everybody. And then UAW will probably settle also pretty soon. So then everyone's back to work.
Dude,
I don't know if that one's pretty
there-
soon. That one.
No,
that
the
one's-
UAW one's going to go for a while, and they're going to release the Cybertruck while they're on strike. It is going to.
Yeah,
be
when is that happening, bro?
massive.
We're almost at the end of the year.
October.
No, October. There's a lot of people.
October.
Internal leaked emails have said that the first deliveries will happen in October at some point, like probably right before Q3. It would make sense because Q3 is not going to be great for sales, and they've said this because they're doing factory upgrades. So it would make sense right around the time that you're about to report some shitty numbers. Send out the Cybertruck out in the world and try to at least offset some of the news.
The three Cybertrucks will land.
They're looking good. I mean,
Hey, they're looking good.
Those photos.
I don't think there'll be a lot in the beginning. So
Did you see that video someone posted? They were like, "It's sad that we can't get our own American president in a Cybertruck." And Elon
yeah.
did you see that
so
tour that he did
ridiculous.
with?
Ridiculous.
It's unbelievable. It's
insane.
so the thing is it's so transparent when you start to see things like that. American
Yo,
company led by a CEO that is basically created the EV division and putting rockets in space, helping Ukraine win a war, and you're shitting on the guy. It's
Bringing
so
manufacturing back to the U.S.
freaking transparent, and it's for $2 million of campaign donations. It's not.
By the
It's
by
$2
the way,
million bucks.
did-
What does that value add to the American economy that guy's
Well,
company?
maybe then Elon should pay the $2 million and get them back into the system.
What he should do is he should give every candidate some stock options. That's what we got to do.
Listen,
We gotta
whatever
incentivize
he has to
these
do.
companies, give him some freaking.
what do you guys think about the whole Russell Brand thing, about how the UK Parliament is reaching out to
Bro.
social media companies and saying, "Oh, why are you guys monetizing
Have
this
you guys heard this
rapist?"
shit? Have you guys heard?
Yeah.
Carlos and Vitaly?
Which
No.
is
Yeah.
nuts
I've-
because
I've-
the guy,
I've
it's
been
not even
following.
proven yet. It's not even
Let me give the
proven.
the 30-second
Yeah.
TLDR. He's been accused of sexual assault. It's not proven in a court of law. YouTube demonetized the channel, and now the UK Parliament, the government, is reaching out to tech companies to take down his channel, and it's not
What?
even proven. It's not proven. It's like if I said Vitaly punched me last night. Like,
this is
So Russell Brand, the comedian. This is
God, dude,
well,
you're
he
not right.
turned into
Yeah.
a political
I
commentator.
know
over the
he's
past couple years.
philosophy and yeah. but
No,
I'm
he
saying
has
still.
he has a very successful podcast that is politically motivated and very critical of a lot of the systems, especially in the mainstream media, and how they skew information. He's been recently under attack. They came out with all these allegations. I think Megyn Kelly actually had the best take on this because she actually clapped back. Yes, the allegations have not been proven. No, I do not think that Google should have demonetized them, but at least the information that has been released to the public, some of it is pretty damning, and it does seem that there was some misbehavior.
Bro, that's
Some
fine, but it's not proven. Like if it's not in the
Yeah.
court
No,
of
I
law,
get it. But this is what this goes back to the argument that we had about free speech, freedom of speech, and what can happen to you if you piss off the wrong people.
Well, don't worry, he's going to X.
You know what I'm saying?
Well, Twitter said he's fine. X said he's fine. and
all the
Rumble said-
pedophiles
not
and
the
all
point.
the rapists can go to X.
But that's not the point.
That's a good joke. I'm not gonna lie, it's a great joke. That's a great joke.
But that's not the point.
They're not going to be on Threads.
There's no one on Threads. If he's that'll actually be his punishment. They'll say you can only post on
You
Threads,
can
where
only
no one will
post
see
on
your
Threads.
shit. That's where they go to die. No, the point is that's an example. That's how this works. That is how the mainstream media controls narrative. That's how the mainstream media works for the government. And okay, well, Russell Brand is a very popular figure, and he's obviously pissing off the wrong people. But this is what happens. This is what I mean by the terms of service of a tech company is more powerful than the Constitution.
Now I know why KRIS likes Google. He's trying to not piss off YouTube for all of his cursing. He's trying to make sure we're in good
he doesn't
standing
shit
with
on
you
Apple.
guys.
Keep
When the
monetized.
bull market comes, we need that algo, baby. We need 100,000 subs.
No, the bull market comes. We're
Smart.
going to be
All right.
fine. Absolutely.
I'm going to go, guys.
We're
It
gonna be fine.
was a good one.
Okay, V and Carlos, if you had to go, that's fine. I got to ask KRIS one question about the bear case of Google. Just give me one bear case, unless you guys want to stay for that, because
Yeah,
we
well,
said a
let me
lot
hear
of
this.
bullish
I'll hear this.
stuff.
Well,
But I do
actually,
wanna hear
wait.
one bear
Before
case.
you get there was a point that I wanted to make. It's
Go
like
ahead.
You've seen, I think we are getting ready among all of the tech companies to see the next level up of their growth story. Like there's S curves on top of S curves. Google's growth story is not just that they're going to expand search. It's not that they're going to just charge more ads, even for Meta or these companies. That's not what the long-term bull case of this. When you think about what these companies are going to be 10 years from now, what we know them to be now is going to be a small port. This is, again, my own like Carlos Stradamus hat. I'm just saying this. So when we talk about the LLMs, the reason why Google was not concerned with LLMs is because in order for you to use a technology like that, like an AI technology that you can speak in natural language, the input device has to be different. You're trying to use, it's like trying to put video games on old Motorola phones, right? You needed to invent a new platform that was able to fully utilize the capability of that technology. What you really need for those LLM searches to work is it needs to be voice. It needs to be a voice. And right now, people predominantly don't search that way. And so the next level up of that is where you can actually just talk to your computer. Hey, I'm looking for a search on this, and it'll actually automate and open up a bunch of windows for you. When that happens, the old way of searching that we do now, where we type into a search box, is going to seem like using the yellow pages, right? It's like, imagine, like what we're trying to do now is use AI to tell me which page in the yellow pages is going to give me the information. It's new technology that needs a new input device. It's the same reason why, like Apple, when they started using a mouse, you need a new input device, and that's going to be speech. And so the next level up for these are going to be these personal assistant type LLMs, where it disappears into the background and it becomes a much more natural way of interacting with these things. Because even now, I'm telling you, it's uncomfortable. One of the reasons why we use keywords and search phrases is because it's more convenient for us to type that way.
Yeah.
Like if I want to cite the best restaurant, you know, in LA, but that's not how I speak, right? That's how I have to type to get the results that I want.
Bitch, give me that best restaurant now.
Yeah, you'll be like, listen,
Yo, Chris will be yelling at his LLM all night.
You'll be like, yo, I'm make me a reservation, or give me the top 5 restaurants with availability.
You guys talking about? I have an LLM.
You know what I'm saying?
It's my wife.
My
Like,
wife.
yo, where's my dinner now?
Your LLM
Yo,
makes dinner.
the Marine.
I don't think she's home yet. I don't think she's home yet. I'm good.
That's good. You can yell
Anyway,
that out
well,
right now.
my
So what's your bear case?
So there's 2 bear cases with.
I gotta go eat dinner.
yeah.
This bear case.
So
You got to get your
just
LLM
really
to
quickly.
make you dinner.
Amazon, by the way, what you're talking about, Carlos, is actually doing that. Where now they're going to be integrating generative AI with. I'm not going to say her name.
The next level
Yeah.
up. That's when the LLMs mean something.
So there's 2 main risks to Google. Both of them involve things that Google isn't necessarily in control of, which is sad. But one is legislation, right? Like right now, there is a lot of talk on breaking up Google as a monopoly. So right now, Google is going through a trial right now by the DOJ, saying Google monopolized its search position by unfairly giving preference, paying like Apple to be the default search on their phones and Samsung to be the default on their phones. And so there is an argument there. So if, let's say, things turn out like Verizon, where basically they'll say to Google, break yourself off. I don't even know how that would work. It just makes no sense, but that is a risk that they'll get penalized heavily by the government, in which case they'll have to limit themselves, in which case that opens up the door to competitors to come in. So like that's one major risk. I don't think that's a major risk at all, considering that Google really hasn't done anything dishonest. There's just been basically doing what every other company does, is promoting their services using their revenue that they have. And
well, right now they're being sued by the DOJ or the SEC. Was it the SEC? FTC.
Yeah.
Right? But basically they're saying, hey, DOJ. Yeah. Hey, Apple's a monopoly, and we don't like it that you're paying them to be on their monopoly.
Yeah.
That's
well, not only what they're saying is Google right now pays Apple close to $20 billion a year to be the default search engine on iPhone, right? Believe it or not, JP Morgan did analysis of this, and one of the things that they could settle out of court and just say, oh, well, we're not going to pay Apple and Samsung anymore, which means that operating cash flow would go right back to fucking Google again, which means their operating income would end up being $10 a share instantly overnight, which means Google shares would skyrocket to 200. So,
well, but they have to stay on the
the way you're describing it, it's not that's not a bear case. These are more these are just more like short-term headwinds.
Right.
He has no bear case.
There might not be a real crazy bear case, maybe.
There is another bear case where Google's cloud and AI like AI simultaneously. Right now, Google is moving into the AI sector. And so if they get massively associated with AI and for some reason AI crashes, like everyone's, oh, there's an AI bubble and the AI bubble crashes. Even if that's not a real statement, just like the tech bubble, Google will be impacted as well, which
All right,
means
guys,
that
I got to
it'll go
jet.
down
I
in
got to go pick up
price,
the kid.
right?
Bye, Carlos. Have a good
So
one.
I don't think there's an AI bubble. I think that AI is real. I think I'm seeing a lot of applications come out that have AI features in it. The question is around who is going to be able to successfully monetize this. You know, a lot of times people come out and pretend like, oh, I have an AI software, but how are you monetizing? Because we've seen that with a lot of companies where they'll say, hey, I have an electric car, but they don't make any money on the electric car. So what does that mean? That means that you don't really technically have a viable business. Google is actually making money on its AI. And I think they're going to keep doing that. Same thing in NVIDIA. NVIDIA is making money on their AI chips, right? So
I would
a lot
actually,
of,
I'll say one thing before I go, that I don't think Google is being credited with AI right now, but being at a 28 PE, because the only one who's being credited is NVIDIA. That's it. So I don't think that's happening yet, what you're saying. As soon as people realize Google's a real AI company, then I think things change, actually.
Oh, yeah. I expect that, dude. That's one of the biggest bull cases that I have for the next, next 6 to 12 months. We are going to see a lot of growth coming from AI for Google. Like it's going to be insane. And when those numbers start coming out, people are going to be like, holy shit, did I miss out on Google? And it's going to be,
again,
you know, again.
Again. All right. See you guys later, man.
Later.
Bye. All right, guys. We'll see you on Sunday. That's it for the week. Have a good one. Bye, everyone.
Bye.